Hello and welcome to another property market update for Sydney, Melbourne and Brisbane for December 2023, the last one for the year. And as usual, we're joined by Lauren Staley from Infolio Property Advisors and Your Empire in Melbourne, and Zoran Solano, Hot Property Buyers Agency and Your Empire in Brisbane. Now, we're going to kick off straight away with the latest numbers from CoreLogic RP data. I'll just share that to the screen now and just give you a quick kind of read through. So for the month in Sydney, positive 0.3, 1.8 for the quarter and 10.2 for the year. Melbourne, minus 0.1 for the month, 0.6 positive for the quarter and 3 for the annual. And Brisbane, 1.3 for the month, 3.9 for the quarter and 10.7 for the annual. I'll keep that up for a second just so you can go and see. But look, the main thing to pick out of this is obviously for the majority of the country, it's still positive. As we get towards the end of the year, obviously things can tail off, but it's still 0.6 for national and 7% annually. So on $1 million property, that's still $70,000, which is massive. And also the thing to remember is this is average property prices in the areas. And so you might get some properties going up 1 or 2% in the month, some dropping down 1 or 2 and then giving you that 0 as the average. And what we're always typically saying, all three of us over the last decade or so, is quite often the blue chip areas, which all of us buy in, quite often they're always outperforming the other areas. And so you're going to get other places like maybe Docklands in Melbourne or Parramatta in Sydney or maybe up the Gold Coast where there's mass developments. A lot of that may be coming down, whereas the other stuff is going up. But over to you, Lauren. How's things down in Melbourne and what do you read into those numbers?
Yeah, look, I couldn't agree with you more, Chris, because we had a stellar month. So November for us was one of our biggest Novembers in a really, really long time. So what we saw in Melbourne was that we had a jump in. So we've had 40% less stock than what we would call a normal market or what we'd normally expect to see in the springtime. That we then had an increase by about another 15%, but we're still, 30% under what we usually would have. So although we've had some stock increase, a lot of it's been stuff that you wouldn't typically, we wouldn't buy. So I think those numbers are really relevant to the properties that are being sold because they need to be sold. They're B and C grade investments. Whereas everything that we've been buying, we do a lot of home buying. And even when we're buying for investors, we're looking for land and house. We've just seen that there's been competition. Lots of properties are being sold before auction with really big bids just so people can get them off the market. All of the auctions that we went to were heavily contested for. And everything that we bought pre-market, off-market, or we put in a pre-auction offer because the competition at auctions are really strong. So, they're talking a lot about it being, pretty, grim down here, but this has been a really competitive space, particularly the home buying market. So it feels really good. It feels really positive. And I haven't sort of had that momentum. As I said, Melbourne got cooked. So, we haven't had that sort of strong momentum for some time. So it feels really good at the moment.
And that's why we believe you've got to listen to these kind of commentaries from people that are actually on the streets, seeing property, both being buying and also seeing what's being sold as well, rather than the journalists just trying to interpret this data. And again, a classic thing is looking at the auction clearance rates, which might be only 50 or 60%. But as Lauren was saying, is all the good stuff is 100% clearance rate, all the rubbish isn't getting sold, and that gives you that balance of 50%. Zoran, how you see things up in Queensland?
Mate, it's an interesting time up here. So at the moment, contrary to what Lauren just said, I can't wait to get to an auction. I have been dominating in the auction environment for the last 2 months as buyers are preferring the security of a conditional offer, especially in the lower end of the market. So let's say the 600 to 1.2 million range. Let me loose at an auction and I'll save you money. North of 1.2, where the buyers are probably a little bit more in a stronger financial position and going to auction is not such a concern. That's where we start to see a bit more competition. But obviously we always bring a strategic approach to the auction environment and we'll increase our client success rate. One of the unique things I think everyone needs to realize with the commentary that we three provide is, as a buyer's agent, we're very uniquely positioned as an advisor to our clients holistically with their portfolio. We do vendor advocacy. So it's a barometer of where the seller, owner's mentality is when they're selling, and we're a leading indicator of that. And we're also a leading indicator of the buying environment, given clients are coming to us for assistance for a future purchase. So at the moment, I'm seeing sellers who are holding off doing anything until after Christmas to see where the dust settles in the market. So I think in Brisbane, we're going to see a flurry of stock in January and February hit the market. Some of those may be people who have woken up and realized their interest rates have gone up and they've spent too much over Christmas. That's a reality for some people. So buyers, I think, here in Brisbane need to be in a position to capitalize on that sort of situation. But right now, there are still a lot of buyers. The growth that you showed on that chart, 1.3%, I'm seeing that daily when I'm putting in an offer. Just this week, I missed out on 2 properties for clients because we weren't prepared to overpay. But we only missed them by probably about that 1.3% margin. So statistically speaking, we're seeing that coming in and filtering in on the ground with some real life results. What about you, Chris? What's going on in Sydney?
Yeah, look, Sydney's pretty much the same as normal. It's like I used to say on Sky News. You can almost tune in once a year. We'll tell you that life's pretty good, and then tune in again next year. Because again, the common themes that we've always had is over the last 12 months is buy when you've got the money to buy. Don't try and time the market because you're probably not going to have the serviceability to do it later on. And obviously serviceability has been going down. Again, if suddenly interest rates start coming off next year and then the market does start kind of pumping up, which some of the economists are saying, then people will start whinging again, the market's gone too quick and I've missed out. And we're getting the same excuses decade out after decade. So as usual, all of our advice is get in when you can. Now, obviously, December and January, you can think, the agents are all disappearing, everyone goes off on summer holidays, but that can be opportunity as well. Where do you generally see the opportunity, Lauren?
Well, right now, I think what we're seeing, there's a lot of the young agents, the new agents don't typically take January off. It's the veterans like us that do. So there's still absolutely deals to be done because, most agents and buyers agents are on commission only. They want to make some money. So I think that just knowing that means that there's opportunity. What we see in Melbourne, or what I typically see, is that anything that didn't sell in November or early December is ripe for the picking because they are looking down the barrel of 5 months of vacancy. So you're not going to get it sold in January unless you're really lucky. That you're not going to, you might get it on market in February again, and then you've still got a couple of months of settlement. So you're potentially 5 months down without any money coming in on your investment, or if you've bought another property, bridging. So it is a very, very, very opportunistic time. Stock will be limited, but the stock that is available will generally be very motivated sellers. And then we also see people, a lot of the properties that we're looking at are homes that are going to market in February where the vendors are like, look, if you can get me a deal now, I'm happy to take it. So again, there's a limited supply, but that supply is usually very, very, very motivated.
And what do you think your predictions are for 2024? Do you think there's going to be property growth?
I feel that we're at the bottom of another rising market. Like with what I'm seeing, we don't have enough good quality stock where there is definitely appetite to buy. We're at capacity with clients, even though we've cleared out a number of them. I've got 5 new client meetings this week. So people are looking to do stuff. We're also seeing investors coming back and talking to us, and whether that's that they're needing to offset tax issues, or whether they're just thinking that they want to capitalize on capital growth while the market's soft, and knowing that the rental market's high, even with interest rates. There just seems to be a bit of a change in sentiment. I wouldn't have said this to you 6 months ago. It was grim. But now I feel as though there's genuine positivity. And I think a lot of it comes with the fact that people just realize that we have to be somewhere near the top of the rate rises, and therefore they've adjusted themselves and their thinking and how they're living and what they can cope with. So yeah, I think we're going to see some growth next year, and I think it's going to be a competitive space, and I think there's going to be lots of good opportunities to look at.
Okay, 100%. And obviously in December, we had the rate hold, which was great news for a lot of people. In November, we had 8 client sign-ups from anything ranging from, I guess, just under $1 million up to $2 or $3 million, and a mixture of home buyers and investors. So there's definitely opportunity out there. We've done deals on Christmas Eve. We've done on the 3rd of January. So if you're in the market, that's what we're saying to these clients, is be around just in case something's going to be around there. What about you, Zoran? Any thoughts for December and January and predictions for next year?
Yeah, I feel that buyers up here, or at least the buyers who are interested in purchasing in Queensland, especially those from interstate, have probably put purchasing a property on the back burner until the new year. Obviously, a lot of the clients we're representing who are investors, we've done our dash with our relocators because you can't get a house now and get it done and moved in ahead of the school year unless you sort of are buying something in the next week. So what we're finding now is it's a lot of investors who are preparing for January and February, are looking forward to 2024 and planning what they're going to do. So I think that between now and Christmas, we're probably going to see the tail end of the market and start to wind up. But I think January is going to be huge with new people coming on board, with those investors looking to purchase up here in the market. And I know that a lot of selling agents, one agency in particular, they're gearing up to launch up to 50 to 70 properties they're hoping to have launched for an auction weekend extravaganza on the 2nd of Jan. They're going to be launching them all on that day and having an auction at the end of January as a big extravaganza. So, there's a lot of agencies who are really planning to hit the ground hard in 2024.
And as we all know, Queensland, they always do it different. All the pizzazz and the jazz and the rest of it. Anyway. Any last tips for the new year, Lauren?
Oh, what's my last tips for the new year? Oh, look, I know that we say it over and over and over again, Chris, but do not try and time the market. Just get in. We constantly see people making errors by waiting, and we don't quite know what they're waiting for. Get a really good mortgage broker on your team. Get someone who can get your finances and your structure in place. It will go so far. Even if you've got assets, one asset, it only needs to be one. Have it looked at, get it refinanced, put yourself into a position, get a line of credit so you've got the ability to put a deposit down if an opportunity comes your way, and speak to professionals. We get advice on absolutely everything else, but this is the biggest decision most people make, and yet so many of them still want to go it alone. Level the playing field and get yourself some good advice along the way.
How about you, Zoran?
I don't know if I can add any more to that. other than my usual saying, all you get from sitting on a fence is a sore bum. So get in there and do something. But also, one thing I'm seeing at the moment, quality over quantity. If you're thinking about purchasing 2 low-budget properties next year, don't. Those are lower socioeconomic areas that have instability of growth. And as we head into a time of potential uncertainty with how these interest rates will rise and how that'll affect the lower socioeconomic market, stick to the blue chip, stick to the inner and middle ring areas. So buy the $1 million property as opposed to going out into the sticks and buying 2 $500,000 properties. That's my advice.
Yeah, some very good tips there. And look, certainly go onto YouTube. You can go back through all our updates over the last year or two. And what you'll find is there's consistent advice all the time, whether the interest rates were going up or down. You'll see consistent advice, and especially even if you go back 10 years, we're saying exactly the same thing decade after decade. My last tip is look, generally people have got a lot of time over Christmas and January. They get to spend time with their families, whether you're single or you've got a couple or kids or whatever else. Read some books. You can download a lot from the Your Empire website. Get some other books. Just get yourself sorted out. New Year's resolutions, go and do something. We always survey our database once a year, over 10,000 people. 99.9% of the people say, I wish I'd bought more and I wish I'd done it sooner. And so that's the biggest tip of all. So thanks for joining us this year. Good luck for the Christmas holidays, and hopefully we'll start a new year. And again, predictions could be, even if the market rises 2%, 5% or 10%, it's still much more money in your pocket. So go and do something. Thanks for joining us.